Good morning, everyone. Welcome to Morning Markets. My name is Chris Leyland. I am Director of Investment Strategy here at True Potential. And what I want to do today is just really talk through equity market performance that we saw yesterday. So if we look at the headline numbers, the FTSE 100, it was actually off 4%, and US stock markets fell up to 6% yesterday. Before we look at the cause of this, I think it's quite important to look at where we're up to in respect of stock market return since the lows of the 23rd of March. So since that low point, global equities yesterday were up over 43%, which is an incredible return in such a short space of time. What you find is that when equity markets move very quickly upwards, they become more sensitive to negative news, which is exactly what happened yesterday. But what was that news? The news was the Federal Reserve board members produced their economic projections, and that showed that the US economy was going to contract by 6.5% in 2020. Now, I think taking a step back from this, we all know that this year we'll see negative growth due to the coronavirus. But this figure made some investors nervous, particularly in light of the strong returns that you'd seen from stock markets over the last 2.5 months. What wasn't reported so heavily in the news is that the Fed actually are projecting a 5% increase in growth for next year, so for 2021. And that's actually around about 3 times higher than what we've seen on average for GDP growth over the last 10 years. The Fed also said that they're going to continue with their bond purchase program, at least at levels seen over the past few months. So this gives the Fed optionality to buy more bonds if they need. Therefore, they can further stimulate the economy. But look, I guess let's just take a step back and let's just think about the overall environment right now. And for me, it's important to digest 3 points. So firstly, central banks and governments are determined to do whatever it takes to prop up the global economy. They've acted quickly and at levels never seen before. This is set to continue, and this has been very positive for equity markets so far. Point 2, lockdowns are lifting faster than anyone expected and generally have been successful. Consumers are starting to consume again. In the UK, we have retailers opening on Monday, and in Europe, bars and restaurants are actually already back open. Final point, should there be a second wave, which really is the key worry, not just for stock markets, but for everyone in their own personal lives. But what's different now compared to what happened earlier this year? Well, actually, the general public and businesses, they know what they need to do. We know that lockdowns work, and also we're closer to finding a vaccine. We're closer to having testing and tracing introduced all around the world than we were in March time. Okay, so that's everything from me. I hope you enjoyed my video today, and I look forward to speaking to you soon. Thank you very much.